So if something you say and a reasonable person in the same circumstances or in your shoes would have also said the same thing, they've given that answer that was false, but it was made with genuine belief that it was true. So it protects people who were being honest in that moment and from making reasonable mistakes.
When you said the insurer finds out, it's not like the insurer is out there like tracking all our data and trying to work out every time we go to the doctor they get pinged.
So it's about answering the questions honestly as best as you can, what the insurer is asking of you. So it's pivoted to me much more the burden on the insurer to ask good questions and follow-up questions.
If you say I don't know, that's more than reasonable. Like, I don't know all of my dad's medical history. Is it reasonable that I don't know? Well, should I be a better son and ask? Yeah, probably. The answer is yes. Why did I have to say that was okay?
The income protection benefit within Zurich, and a few other insurers still do this too, they had an inbuilt death benefit policy.
Hello there, welcome back to another deep dive episode. And today, for the first deep dive, we've got Lenny. Thank you for joining me.
Thank you for having me.
Okay, so today what we're going to do is we're going to talk about unpacking disclosures in insurance applications. So we've done a few videos before about pre-existing medical conditions that we've done with Ash. But today we're going to be talking about the disclosures, the impact of disclosures when it comes to making a claim if you've inaccurately disclosed. So talk to me about what are the different types of, what is an insurance application? What's involved when you're applying for life insurance?
It's essentially like an interview, and whether that interview is held, say, on the phone, they've called like a tele-interview, or if you're completing a personal statement, or if your advisor is taking you through that application. It's all about answering truthfully about specific questions that the insurer wants to know in order to make an assessment on your insurance application. So those things primarily relate to your health information, as well as your occupation, your finances, as well as your family history as well, sort of the key areas there.
Yeah. And so, an advisor, most advisors will understand what's your occupation, what's your income, all of these kind of key factors, male or female, all of these things to generate a quote. But when we're applying for an insurance policy, the insurance company wants to know every health condition you've ever had. And so they ask a lot of questions. Mm-hmm. So the duties at application stage. So we've had, changes over the time. So it used to be duty of disclosure. Yep. Now it's duty to take reasonable care, not to misrepresent, or something like that.
Yep.
I like the acronym that you've put on our notes, which is good. So talk to me about what's the old disclosure requirement and what's the today one?
Duty of disclosure was primarily around when you're answering those questions, bringing up anything that would be reasonable to bring up that would be relevant in them making an assessment on your application.
Yeah. And one thing that also was the case is anything that happened during the application stage, you had an obligation to reach out to the insurance company and let them know as well with that duty of disclosure. It was a bigger requirement on the applicant to make sure you are telling everything that would reasonably impact the insurance application, even if you as an individual doesn't actually know what's relevant or what's not relevant. That was the disclosure requirements. And so 2021, they made changes. What is it now?
Duty to take reasonable care. As like we said before, it goes on and on. It's a very long acronym, so we'll keep it at that. And I think with the duty of disclosure, it's about bringing things up, but it's also about answering things correctly and not making a misrepresentation, which we'll get to. So it's about answering the questions honestly as best as you can.
Yeah.
What the insurer is asking of you. So it's pivoted to me much more the burden on the insurer to ask good questions and follow-up questions.
Yeah. And that's right. The obligation's on the insurer to ask questions. As an applicant, if they don't ask me and I don't tell them, then it's the insurer's fault and the insurer wears it. So let's go on a bit of a history lesson because I know you've done the research on the duty of disclosure. The term hadn't changed, but there was changes with it. So in 2014, what was the requirement?
When it comes to the duty of disclosure, there were sort of two key timeframes, which is pre-2014 and post-2014. So in 2014, to avoid a contract, the insurer had to prove that they would not offer terms at all, if not for the misrepresentation. Like I said, we'll get to that in a bit. Yeah. But basically, anything that you said that was incorrect. Like they wouldn't have offered you any sort of terms at all.
Yeah.
You would have had a decline.
Yeah, full decline. Yeah.
So following 2014, in order to avoid or cancel a contract from the start, the insurer had to prove that it would not offer the same terms. So they would have, say, put it a loading or an exclusion or a reduced benefit period or something like that, if not for the misrepresentation. And they also have the opportunity to vary the contract. So they can go back to the start and be like, we would have put an exclusion, say, for mental health, so you can no longer claim for a mental health condition.
And the reason why we're talking about this history lesson, people might be watching it going, we're in 2025. Why are we talking about what happened in 2014? The reason why is because if you took out the insurance contracts back then, you were obliged to meet those rules back then. If between 2014 and 2021, if you took out the contract then and you still hold that contract, whatever your disclosure at that time, you had to have it, you were under that duty of disclosure. So that really harsh rules back then. So it is important for people to understand the differences. Even though today, if you're taking out a new contract, you're under the new rules, which is much more consumer friendly. And so, that's why we're kind of giving this history lesson. So you talked about, about voiding contracts and all of this. So before we talk about that and all of the nuance there, let's talk about what does it actually mean to make a misrepresentation? Like what are we talking about?
So I did some research and actually I couldn't find a specific definition in the Insurance Contracts Act of 1984. So instead we're going to rely on what TAL, one of the insurer partners we have, and how they define it. A misrepresentation is a false answer, an answer that is only partially true, or an answer which does not fairly reflect the truth.
Yeah, cool. The reason why I asked that is because I've gone and looked at Tao's question when it comes to mental health, because mental health is kind of the greyest area when it comes to disclosures. It's like, if I've broken my leg, I kind of know I've broken my leg. So Tao's question about mental health is they ask the question, this section is about whether in the last 10 years, and that's all in bold, well, not bold, it's in capital letters, like they're yelling at us. In the last 10 years, you've had to receive medical advice or treatment, including surgery, for any healthcare professional for the following. Now, this is saying been diagnosed with or had any symptoms of mental health illness or issues, including but not limited to a whole bunch of mental health conditions that they're listing. So one of the things that's really interesting is that it talks about a diagnosed or symptoms of. And so when we talk about, is it false? Well, you may say no to it and it's not false, but is it, what do they say? They said partially untrue, or the answer which does not fairly reflect the truth. It's very broad in terms of that, in terms of what they call a misrepresentation. So it is interesting to think about when the questions are being asked of you, listen to the questions really clearly. And if you need clarity around what those questions are, ask the person who, is doing the tele-interview, again, can you just clarify exactly what it says and answer correctly? That's super important. So talk to me about, you've done some research on what is considered not a misrepresentation.
That's right. So like you're saying, it can be a little bit scary to think of like, what if I've said something that isn't quite the truth? But that's where this legislation sort of protects consumers, because it defines two sort of scenarios in which what a false statement might be, but they don't consider that an actual misrepresentation.
Yeah.
So if something you say and a reasonable person in the same circumstances or in your shoes would have also said the same thing, they've given that answer that was false, but it was made with genuine belief that it was true. So it protects people who were being honest in that moment and from making reasonable mistakes.
Yeah.
And the second one is if you and a reasonable person in those same circumstances, or again in your shoes, had given an answer that was false, but the falsity isn't relevant in influencing the assessment of your application. So it could be things like you haven't weighed yourself for maybe a few months, but you haven't noticed your clothes getting too much tighter. So you've given, I currently weigh 70 kilos, but in actual fact, you were weighing 74 kilos. Yeah. But that isn't in itself isn't going to make a material difference in how the insurer would assess your application.
Yeah, that's right. So, weight and height matters when it comes to insurance, but it's only at a relatively high level. So For myself, if I said, how was I was 83 yesterday. If I'm 83 or 81, it doesn't materially impact the insurance application.
Yep.
So me saying 81 is false, but it's not materially impacting it. I didn't intend to mislead. And so that is not a misrepresentation.
Exactly.
And one thing that, I found really interesting is it does talk about a reasonable person or person in your circumstance. So, an example being that, if you're a doctor and you're giving medical disclosures that is, untrue, but because you're a doctor, you should know it's untrue. But you and me, we would give that medical disclosure about our blood pressure or about, a test. And I think this is the case. It would be reasonable for a person in our circumstance not to know it as in-depthly as a doctor. So that's where, sometimes what you do and your actual occupation does matter in terms of what is reasonable for you to represent or what could be considered a misrepresentation.
Yeah, so not only the pub test, but, a pub of all the people that are on the medical campus going to the pub.
Yes, yeah, exactly. All right, so now we've kind of got a good understanding about the duties. What's our obligation as a applicant of the insurance? Next, we've talked about what is a misrepresentation. Now let's talk about the consequences. What's the consequences of our actions? So if we were to misrepresent our medical history, what are the two different factors when it comes to that misrepresentation?
The first key one was that misrepresentation made fraudulently or non-fraudulently or innocently? So that's the key one there.
Okay, and then so talk to me about if it is fraudulently, what happens?
So AFCA defines fraud as when a person makes a statement or disclosure knowingly, without belief in its truth, or recklessly, and having not cared about whether it was true or false. Being careless or being negligent is not enough to prove that it's fraudulent.
Okay, and then we've got an AFCA case, which I read through before doing this, and it does talk about how a policyholder didn't get paid out a claim because the insurance company determined that there was a fraudulent disclosure. So talk to me about this AFCA case.
Well, in those cases, if the misrepresentation was found to be fraudulent, the remedy available to the insurer is avoiding the contract or cancelling it from its inception. They don't always have to do that. It's just the option available to them. There are some nuances as to whether that's been fair, so it might not always be the case, but high level, that's what the consequence is. And in this case, a woman had passed away, but in her original application, she misrepresented to the insurer, in this case TAL, about her medical history. So when it came to claim time, TAL found out about the misrepresentations and determined it to be fraudulent, and they voided the contract.
And fun fact, not so fun, but the actual life insurance claim had nothing to do with the fraudulent disclosure. They were separate issues and concerns. Now, why it actually didn't get paid out is because had the insurance company known the correct disclosures, they wouldn't have even offered cover. They would have said, hey, that's too high a risk. We're not going to offer cover. So had there been accurate disclosures and non-fraudulent disclosures, the insurance company would have said, hey, we're not comfortable with that because it was pretty significant health history. But even if the claim wasn't relevant to the disclosure or the misdisclosure, which was interesting. The other fun fact is the policyholder went direct to the insurance company and made their disclosures directly. So
there you go.
We've got a lot of bias as to why I don't think that's the right thing, but we'll move on. So the next thing is non-fraudulent. So talk to me about that.
Well, it's a bit of a process of an elimination first. They need to work out a certain number of facts. The first one is, would the insurer have issued the policy on the same exact terms? If they would have, then there's no remedy available to them.
Similar example, let's say I, disclose that I was 90 kilograms, but actually I was 100, but it still isn't going to, add a loading to my policy. Then all good. You missed, you non-fraudulently disclosed, but it didn't impact it, and we would have given you the same policy in the same terms.
Exactly right. The next one is if they would have altered the terms. If they identified the misrepresentation within 3 years, the insurer does have the option of voiding the policy, regardless of what kind of benefit it was and the degree of that misrepresentation.
When you said the insurer finds out, it's not like the insurer's out there like tracking all our data and trying to work out every time we go to the doctor they get pinged. That's not it at all. We've had a client that's had this. They took out the policy, made their disclosure, then increased their cover and went to increase it, and their disclosure had changed. And not changed because in the last 2 years they had something new. They had re-disclosed something that happened prior to the original application. So that's when the insurer goes, actually, let's ask some more questions, understand that because there was a non-disclosure or misrepresentation. Let's understand, does this impact the ability to get cover as well?
So we've got a case here to talk about. Again, this is Tal. Sorry, Tal. And in this case, it was a misrepresentation about medical history. They did bring up a claim for trauma within 3 years. Tal did avoid the policy, and AFCA, upon putting in a complaint, they actually sided with Tal. They actually didn't say whether or not the misrepresentation was fraudulent or non-fraudulent, because in the end they can do the same thing, which they can avoid the policy.
Yeah, because within 3 years.
Yeah.
So that's one thing to note when you're taking out policies or moving providers, that within 3 years the insurer can, if they find out a medical history, then they can say, hey, we're not going to offer you any cover, which is actually what happened to one of our clients. The insurance company was going to just get rid of the policy. But we argued and kicked it up a stink and said, that's ridiculous, because we do believe you would have offered a policy under these terms, yes, within 3 years. However, given that we've got, $1 million worth of premiums with you, the insurance company, let's be a bit more commercial in our approach and just backdate the exclusion on the policy. So we had a lot of back and forward with an insurance provider with this similar thing where they were like, actually, we may not even offer the cover. And so, that's when I got super grumpy. So after 3 years, how do they assess it?
Got to say that's one of the undervalued benefits of getting insurance with an advisor, all of the advocacy that we provide on your behalf.
Yeah, when we get grumpy on clients' behalf. It happens many times. Yes, that's a good call out. So after 3 years, if they find out about a non-disclosure, so what we mean by 3 years, I take out the policy 4 years ago, now I go and increase the cover and I make a disclosure and it's backdated prior to the thingy. Now how do the insurance companies assess that?
Well, again, in terms of elimination, if the benefit we're talking about is a life benefit, they actually don't have any remedies available to them. They can't vary the policy at all. But for the others, they do have that opportunity to make variances, which, like I said before, it could be things like adding a loading or reducing the benefit period or putting on a exclusion so you can't get a claim at all.
And you've got an AFCA. And of course, we've got AFCA cases about it. So talk to me about this AFCA case.
I've read through many. But in this case, this is Zurich, and the policy was held for more than 3 years, and the client had income protection and TPD. At claim time, the insurer found that there was non-fraudulent misrepresentation made about a shoulder injury, which related to the claim as well. The claim was rejected for income protection, and they applied an exclusion retrospectively for both income protection and TPD. AFCA partially sided with the applicant and partially with the insurer on these. They actually accepted the exclusion on TPD, but the claim was actually related to income protection, so they actually had to pay out the monthly benefits for however long.
And why did AFCA say that was okay?
Well, this is one of the funny quirks and actually really surprised me, and it was because the income protection benefit within Zurich, and a few other insurers still do this too, they had an inbuilt death benefit policy. And so AFCA had identified, yes, that is available within that contract, so you can't make any variances.
Yeah, because of that kind of funky nuance is if there's a life component or death benefit component, then there's no ability to adjust it.
Yeah.
And because that income protection had that, they're like, well, bad luck.
So some standalone TPD benefits have that as well. But in this case, this TPD was linked to the life cover, but you can unbundle them now. That's one of the key changes pre-2014 to post-2014, they can unbundle that. So the TPD was eligible to put an exclusion on there.
Yeah. Oh, and sorry, that was the other reason I didn't mention before. But, when we talk about insurers knowing about a medical thing after the fact, it's also claiming, because you've got to give your medical history. You've got to provide a lot of details around the claimable event. So, yes, this client would have claimed because they've got a bad shoulder, but, their medical records showed that it was, a pre-existing condition for many years. And so that's the other reason insurance companies can find out about kind of your medical history outside of the application. Okay, cool. So an insurance company, as much as we don't like it, they have the opportunity to void a contract and say, hey, we're not going to give you the contract. What happens? I've been paying my premiums for the last 2.5 years. The insurance company says, we're not giving you a contract anymore. What happens? Do you just stop paying premiums or?
Well, I couldn't find any legislation that was talking about you must refund premiums or the insurer gets to retain the premiums because you sort of broke the law by misrepresenting. But from every AFCA case I looked at, it said the insurer must refund premiums to, in this case, it was the life insured's estate. If it hasn't already done so, even though in this case, the misrepresentation was made fraudulently.
Yeah. And the reason why, I guess, is that if you're taking premiums for a policy that can't be paid out or is never going to be paid out, then you shouldn't be taking premiums. It's like, if I have a policy for 4 years and then cancel it, for a year, but I actually had cancer during that period that the policy was active, even though it's no longer around. As long as we can prove that I had cancer at the time I owned the policy, then I can claim on it. So that's why they just basically go, let's wipe our hands of it. Here's your premiums back. And we had one of the insurance companies present to us the other day, and the underwriter, shout out to Dave Lowe from PBS, came and talked about this non-disclosure where, one of their policyholders took out the policy and then a few years later wanted to increase it and the disclosures were different. And then they placed the loading on the policy, but they didn't backdate those missed premiums. And again, Dave basically said, well, it was just a commercial decision. It was, we're already telling this policyholder he's going to get a loading for these, health history. And yes, technically he should have told us about it, but we're just going to be reasonable moving forward. We'll charge him the loading.
Bless him.
Yeah. I mean, insurance companies, they do some things that are commercial minded to go, let's just keep the peace. We're allowed to do this, but they're still going to be policyholders, still going to have a relationship with these policyholders for many years to come. And so they've got to sometimes be reasonable. So the reason we actually came to this discussion was you had a client who, when filling in our form about the family history, they said, actually, I'm going to hold on and then have a conversation with my family about all of this family history so I can not misrepresent. And so that was when it kind of kicked off this discussion about what's required, what's not when it comes to family history. So talk to me about what is misrepresenting, what's reasonable care when it comes to family history.
So in this case, we're not talking about legislation, but we're talking about the Council of Australian Life Insurers Code of Conduct, which they provide to the insurers and how they should be going about collecting this sort of information in this case. And for them, they have said that when insurers are to ask information about your family, it should be limited to first-degree blood relatives only. So think children, which some people might forget that one, but their parents as well as their brothers and sisters.
Yep.
Those questions should be limited to those that are specifically asked about. So that, again, that's important about listening to what the insurer is actually asking of you and not just supporting any sort of condition that family member has ever been diagnosed with. But also you need to confirm the age of diagnosis, the age of death, and what the condition is. And that's in very specific terms what you should be telling the insurer.
Yeah. And there's sometimes, the other thing that you've written is like, if you say I don't know, that's more than reasonable. Like, I don't know all of my dad's medical history. Is it reasonable that I don't know? Well, should I be a better son and ask? Yeah, probably. The answer is yes, but it's reasonable that I don't know, all the medication he's taking and all this. And so that's where it is. As long as you're taking reasonable care not to misrepresent, then you're doing fine. You're doing okay.
They also actually recently, with the changes, bringing in Carly, that they've removed the test of reasonableness of, if you should maybe know how your say your parent has passed away. If you don't know, you don't know, and that's a valid answer as long as it's the truthful one.
Yes, yeah. And that's where, talking about these disclosures and all of these things, like Eddie was in our advisor meeting today, was talking about a client, over disclosing and volunteered all this extra information. An insurance company, if they know something, they have to make an assessment based on it. But if they don't ask the question and you answer you answer all the questions truthfully, then it's not making a misrepresentation, because it's back to this. The change with the duty of disclosure was, well, it's on me as a policy holder or as the applicant to make sure I disclose everything I think is reasonable and potentially over disclose. Now it's the other way of going. If the insurer asks the questions, answer correctly, but unless they ask the question, it's not my obligation to volunteer anything. So
I sort of think about it like when you're in those American TV court cases, oversupplying so that the other side can latch onto it. Now the insurers aren't as nasty as that because they want to work with you, but just listen to the question, answer, and pause. If you don't know something, say that, or you need to have a think about it. But just answer truthfully.
Yeah. And this is the thing that I've noticed, in the hundreds and thousands of policies that we've helped people set up. A lot of people have gone to their super funds or gone direct, and as a part of our assessment, we look at, okay, do we expect an exclusion? And if someone's gone and increased their cover with their super fund and they don't have an exclusion, but we know the medical condition happened before then, we always ask, can you provide us the health statement that you gave the insurance company? And the amount of times I've asked and seen non-disclosures, now they're not fraudulent, they're unintentional, but they still may lead to a decline or avoiding of the contract in the future, is really important to make sure we are disclosing accurately. And that's why, again, the big plug for working with an advisor is that they will help make sure you're disclosing accurately. And again, they should never be encouraging under-disclosure or non-disclosure at all. But making sure that any policies you have today, it's really important to make sure your health questions is being answered accurately at the time in which you were asked those questions.
Because like I said before, if the insurer decides to void the policy because they were never at risk of a claim, but they can decide not to void the policy. So if you were to get very unwell and need to make a claim on trauma, but they needed to put an exclusion on that, but they didn't void the policy, you've still paid those premiums for however long, and you might not be eligible between now and when the expiry happens, or if you were to pass away, you wouldn't receive the same amount of benefit as well.
Yeah. Okay, Lenny, this has been really good. We've covered a lot. We've gone through AFCA cases. We're talking about disclosures. But is there anything that we either haven't touched on or that you think is super important for people who are watching this to take away from watching this?
I think we've captured everything. So I just want to reiterate, when you're completing those applications, answer truthfully. I don't know is an answer, especially if it is the truth. They can always seek medical reports and things like that to find that out if that's relevant. And remember the importance of doing that. It avoids any issues down the line. Going through an AFCA case is bloody awful. I've helped someone do that in the past, and it's months and months and months, and no guarantees that you'll win either, to avoid stress that would be an otherwise very stressful time for your family, whether it's for yourself or your beneficiaries.
And not even AFCA cases, but this client who gave increased their cover, and the insurance company was considering voiding the contract for us. That's a difficult process, and if we know everything up front and honestly and candidly, it's much easier to then manage that. And the best time as a potential customer is when you want to start paying the insurance company. The worst time is when they're considering paying you, is because they're going to try and work out, okay, now we're actually going to have to pay, either back your premiums or pay you this claim. And that's when they're going to ask more questions. And so thank you, Lenny. This is really good. Great first deep dive.
Woo-hoo.
You nailed it. Thank you everyone for watching. If you do have any questions about disclosures, I strongly urge you, if you've done an insurance application in the past, go back, ask the super fund or ask your insurance company for those medical questions, because as we said, there are some really significant traps if you're not doing it properly. If you want to watch any other videos that we've done, any other deep dives, there's some videos on the screen now. Thanks heaps for watching.